Hello and welcome to today's The Last Trade Week Ahead video. Now in today's The Last Trade Week Ahead video, we'll be taking a look at three stocks. We'll take a look at Indigo, we'll take a look at Tata Motors, and we'll take a look at SBI Life. Now for each of them, I'll take a look at them from a position of an equity trader plus an F&O trader. But before we go into all of that, let's take a look at the news be affecting our markets this week. Now on the news front, I believe this week it belongs more to the international news front, mainly basically the Euro area, America, and the Japanese, because two very important interest rate decisions are coming up. One is the BOJ, Bank of Japan's interest rate decision, which will come out on 19th next Friday. And then we have on 18th deck, a day before that, on Thursday, the ECB, European Central Bank interest rate decision. So these two are going to be very key. But then for America, there's a lot of data coming out for them, which will naturally affect our markets, especially if you're doing index trading or trading in the Nifty 50 stocks, for example. Then you will be affected by whatever data comes out. In America, because they have the non-farm payrolls, the housing stats, the retail sales, and everything coming out. So that is going to be affecting our market. So this week, expect more of the effect coming from the global cues rather than local. And that's really it on the news front. Now let's take a look at the three stocks. I'll start with Indigo, then I'll go to Tata, then I'll go to SBI Life. Now when we come on to Indigo, Indigo has had a bad fall. Everyone knows why, because of what they did in the airports and the chaos which they created, after which they've had a perpetual fall and it has not stopped. Now, according to me, Indigo has reached a point at which it can sort of give a dead cat bounce, then after which it will resume as shorting opportunities. Now, how I look at it is, as long as it is between 5,001 and 4,640, this is a no man's land. But how I will most likely trade it, between the high of this price bar and this resistance, I'll treat it more like an intraday time trade or overnight trade. So if it breaks the high of this, then I'll go long for 5001 and 5100. On that, if it breaks 5100, then it goes to 5300 and 5445, after which it resumes a fresh downtrend. So what I am looking for in Indigo, basically, I'm looking more from a future and options perspective. I'm not looking from equity perspective, because I don't think anyone should be buying Indigo stock right now. But you can buy the future or buy calls and make money in Indigo if it breaks this high. First targets are these two, which will give some profit. And then if we clear this, then these two. Once it shows any weakness at one of these levels, then I look to short it again for downside target of 4640 and 4530. So what I mean is, even if it goes up to 5300, for example, when I short it, I'll be shorting for, let's say if it's Jan expiry, for example, I'll be shorting for Jan month end to us for hit this sort of. If that's the example which I'm using. I'm not saying by Jan month end it will, but my view on Indigo is the dead cat bounce is coming, and then we're going to get a fresh selling opportunity. But the dead cat bounce will give option traders and futures traders a good profit making opportunity, but it has to clear the high of Friday's price bar plus 5001 resistance zone and 5100. So my target, as I said, is those two first, then up ahead. So that's it for Indigo. Now let me take a look at Tata Motors. Now Tata Motors, unlike the other auto companies like Maruti, if you look at share price, has been doing very well, but Tata Motors has been doing badly, and but mainly that is due to problems with Jaguar Land Rover and all those things. Right? It's not that much of a local issue causing the share price to have had this sharp decline. But I believe now Tata Motors is starting to gear up for a dead cat bounce also, but it has to prove itself within this. As long as it is above 340, this dead cat bounce picture will continue speaking. If it breaks that, then it goes to 322. But if it holds 340, then and then clears 355, then it's opening up for 368 and 390 in the short term. So my trading plan for Tata Motors is pretty simple. I'm going to consider going long somewhere here. Once, basically, if you look at the indicator, the trend catcher is trying to cross over here. If it crosses over in a clean way and the volume buildup improves, then I'll look to go long. If it breaks 355, then I'll look for 368 and 390. This is purely via equities, not via anything else. And so Tata Motors, I'm looking at as an equity buy because it's had a very bad time and their future products look pretty good, which they've released in the past 1 month, and they've created a lot of buzz around them. So that should overshadow a lot of the problems they've been facing with the Jaguar Land Rover issues and all. So I'm looking at it in a positive light for a dead cat bounce. It's an early pick, but it is how it is, and I think it's providing the most value if you go in early and then scale up as things go up. But this whole view will get cancelled if it breaks 340, and then it'll be going down to 322. So as long as it's above 340, I am bullish on it. Next, we'll take a look at SBI. Now, I'm looking at SBI Life because of the insurance amendment bill and everything which has been coming up in the parliament. Now, I think SBI Life would technically not be my pick because of how at the top it is. But I'm looking at SBI Life from the perspective of futures and option traders rather than an equity trader. Like Tata Motors, I looked at it purely from equity. This one I'm looking at purely from futures and options. Now my trading plan is pretty simple. I already hold CE cells in it of one. There's a support at 1960, but I hold of 1980 and below. So sorry, not C cells, P cells. I already hold P cells in it of 1980 and below. So I am bullish on it, so that's why I've sold puts. Now, I've also built a futures position, as I believe if SBI Life ends up breaking the high, which is here of roughly 2050, then it will be having a dash to 2080, and it cracks that, it goes to 2140 and 2185. So my outlook on SBI Life is I'm not trying to buy it now as an equity or something and hold it for the next few weeks. No, this is a quick in and out. In terms of the P cells will naturally, as an upswing comes, they will benefit as they'll expire at the end of December, so they'll give the profit by end of December guaranteed. But if it breaks 2000, this high which I said of roughly 2050, then the future hold them until 2080. If it clears 2080, I'll add to them for 2140 and 2185. So on on SBI Life, I am bullish on it. As long as it is above 1960, I'll continue holding my P cells, and the futures will for a target of 2080 and 2140 and 2185. This has been mainly built by due to the insurance amendment bill and everything which has come. Otherwise, at these levels, I technically wouldn't pick a stock because it's got a lot of resistance. But due to that, it will have a quick drive up. And let's say the futures in 2-3 days, you can cash out at max. And the P cells, once it's, let's say, trading here or here, these P cells will just decay very well till the end of December. So my trading plan for all three is this. And how I look at it is that all three, I think, are offering good opportunities. SBI Life and Indigo are offering quick in and out, not to sit down with them and rest. But Tata Motors can be something to sit with, which should look interesting. So that's it for these three stocks. If you liked the video, then hit that like button and subscribe to the channel.